Welcome to the Deep Dive, and specifically to our segment, Talk Tickers. This is where we break down the latest earnings calls, trying to pull up the key insights for you. Today, we're digging into Zepp Health Corporation. They had their Q2 2025 earnings call just recently, Sunday evening, August 3rd, after hours. And it's been quite a story unfolding with Zepp. This call, well, it had some really significant news, definitely got people talking. Let's make a jump right into the headline financials first, because honestly, they signal a pretty powerful shift for the company. Zepp Health recorded a GAAP net loss of $7.7 million and a non-GAAP adjusted net loss of $6.2 million. Now, okay, there's still losses, yes. But the crucial thing here, I think, is that both numbers were noticeably narrower year over year. We're talking about 30% narrower. But here's where it gets really interesting. Revenue. It hit a strong $59.4 million. And this wasn't just like a slight beat. It blew past their own internal guidance by a solid $8 million. That's 14% over their own target. And get this, it represents a remarkable 46% year-over-year increase.
26%, wow.
Yeah, you heard that right. 46% growth year over year. This is huge for them. It marks the company's first year-over-year revenue growth since, Q2 2021?
That's right. It's been a while.
Exactly. Gross margin came in at 36.2%, pretty respectable, flat quarter over quarter. And operating expenses were down, impressively, 15% quarter over quarter. And underpinning all this, they've got a solid cash balance, $95.3 million. So what we're seeing here, it feels like a company that's not just turning a corner, but maybe hitting the accelerator. And the market definitely seemed to notice.
Yeah, and what's really fascinating about that revenue growth when you dig into it is how it breaks down and what it tells you about their strategy. I mean, sure, the consistent demand for their existing stuff, the Amazfit Bip 6, Active 2, T-Rex 3 series that gave them a solid base. But the real kicker, the acceleration that came from the June launches, the Helio Strap and the Balance 2.
Ah, the new products.
Exactly. These new products significantly boosted their product mix. It's pushing them towards higher value, more premium stuff, which is precisely the pivot management's been signaling for a while now. And those narrower losses you mentioned, they clearly show a significant improvement in operational efficiency, real discipline in their execution, it seems.
Okay, so on that gross margin figure, 36.2% flat this quarter, does management see a path to improving that? Especially with this move towards premium products you mentioned.
Oh, absolutely. They're definitely signaling an expected uptick in Q3. That's a key indicator to watch. And it's largely because they'll get a full quarter of sales from Balance 2 and Helio Strap. Remember, these are higher margin products.
Right. They only launched in June.
Exactly. Only a partial quarter in Q2. Plus, they hinted at other planned new product launches coming up that should help too. That slight year-over-year dip we saw, that was actually kind of expected. It was mainly because the quarter started with, more lower margin entry-level products, and they had some necessary clearance sales for the older Balance 1 models, making way for the new stuff.
Okay.
So yeah, the trend should definitely be positive going forward on margins.
And what about the other side, costs?
Yeah.
How are they managing expenses while trying to fuel this growth, but also, keep an eye on the bottom line?
Yeah, good question. So overall adjusted operating costs were $26 million. That's a noticeable drop from $32 million last quarter.
Okay.
And management actually reiterated their commitment to push this even further, aiming for a $25 million run rate. Shows a strong focus on efficiency, right?
Definitely.
Now, R&D, research and development expenses, they did tick up slightly, up 4.2% year over year to $10.3 million. But look, this isn't a red flag. If anything, it's probably a positive sign.
How so?
Because it directly reflects strategic investment in new AI technologies and building out that product pipeline. That's absolutely crucial for their long-term game, especially for supporting that premium product strategy we talked about. Selling and marketing expenses, okay, they were up 15.1% year over year, but importantly, down 12.7% quarter over quarter.
Ah. Interesting split. Why down quarter over quarter?
Mostly because Q1 had those big physical launch events like CES, the Consumer Electronics Show. Q2 didn't have that large expense, so it looks like, smart allocation of their marketing budget.
Okay. Sounds like they've got a pretty solid handle on the financials. What about their cash position and sort of the overall financial health beyond just the P&L for the quarter?
Yeah, their cash position looks quite solid, $95.3 million. Okay, it saw a slight dip quarter over quarter, but they put that down to timing and operating performance. And management sounds really confident the cash balance will actually grow in Q3.
And what's giving them that confidence?
Well, partly it's bolstered by that strategic debt restructuring they pulled off back in Q1 2025. They managed to convert a big chunk of short-term debt into longer-term instruments, and importantly, with more favorable rates. That really eases their near-term liquidity pressures quite a bit. I mean, this proactive financial management, they've retired something like $68 million of debt since Q1 2023. That's key for stability.
Right.
And maybe further reinforcing their confidence, the company reaffirmed its commitment to its share repurchase program in 2025.
Which usually a good sign.
Often, yeah. It signals management thinks their stock is undervalued and that buying it back is a good use of capital.
So the numbers definitely paint a picture of ZEP turning things around financially. And it feels like this improved fiscal health is giving them the breathing room, the runway to really push their strategic vision forward, right?
Oh, yeah. Absolutely. The CEO, Mr. Huang, he really emphasized that this quarter is, and I'm quoting here, just the beginning of our upward trajectory. He talked about a robust pipeline of innovations, and their whole strategic vision seems wrapped up in their core philosophy: train, recover, evolve.
Train, recover, evolve. Okay.
It's clear they're moving beyond just selling devices. They're trying to build this integrated health and wellness experience. It's more than just gadgets now.
And we saw some strong examples of this in their product line, didn't we? The T-Rex smartwatch, their Adventure Series watch, that continues to do well, known for like extreme durability, great battery life, and those advanced sports modes. They even mentioned features specifically for HYRX, you know, that global fitness race, shows they're targeting niche, high-performance athletes. But the real game changers, as you kind of hinted earlier, seem to be this new integrated solution. The Balance 2 smartwatch, priced at $299, and the Helio Strap at $99. Tell us a bit more about what makes this combination, well, maybe stand out in what's a very crowded market.
Well, the Balance 2, it's really designed with multi-sport athletes in mind, offers advanced tracking for tons of sports, detailed heart rate variability, or HRV, and recovery insights. It's got like 40,000 golf maps preloaded, a superior display, 100-meter water resistance. Oh, and an AI-powered Zepp coach specifically for runners.
So consolidating a lot of features.
Exactly. Stuff that often requires multiple devices from competitors. But what really makes it, I think, unique is the companion Helio Strap. This is Amazfit's first screen-free recovery and sleep tracker. It's pretty innovative because it offers subscription-free 21/47 health monitoring and AI-driven metrics.
Subscription-free, that's a big differentiator.
Huge. It positions it as a really attractive alternative to competitors who often demand, costly annual subscriptions for similar data access. And get this, it was actually recognized by the Quantified Scientist. That's a highly respected independent review channel.
Oh, yeah, I know them. Very thorough.
Right. They named it the most accurate heart rate monitoring device among all the watches and fitness trackers they've tested, even beating out some industry giants.
Wow, that's a serious endorsement. For anyone who's tried tracking sleep or recovery accurately, that's kind of the holy grail, isn't it? Getting data you can actually trust. So how do they pull that off?
Well, it seems to be largely down to their advanced sensor tech and the algorithms they've developed, and they're constantly refining those, apparently. And it's not just the premium end either. Their entry-level stuff, the BIP 6 and Active 2 series, they continue to show steady growth. So they're maintaining a strong presence across different price points.
And all this hardware innovation, it's backed by a big software upgrade too, right? ZipOS 5.0, powered by something called AI ZFlow 2.0.
That's it. And this brings things like voice-controlled workouts, real-time data during exercise, and personalized fitness insights. They've got deep integrations with OpenAI and Google Gemini powering some of this.
Okay, so serious AI integration.
Definitely. They say it improves functionality, performance, even cost efficiency. And they mentioned a more advanced food logging feature too, recognizes more foods, auto-categorizes calories, that sort of thing. Plus, they're expanding their whole hardware and software ecosystem with third-party platform integrations. Think Strava, Training Peaks, showing they're committed to a more connected health experience, not just a closed garden.
So this strategic shift, it seems like it's also really supported by smart operations and market strategy. You mentioned the supply chain earlier.
Yeah, exactly. Their flexible supply chain, using both China and Vietnam for sourcing, that's proven incredibly effective. It helps shield them from, trade uncertainties, shifting tariff policies.
How much difference does that actually make with the tariffs?
Well, they clarified that China-U.S. tariffs for their products are around 25%, but Vietnam-U.S. tariffs are near zero. So this diversification lets them mitigate the majority of tariff impacts through strategic shipping choices and efficiency gains. It definitely reinforces their competitive edge. Seems like they're really thinking ahead about insulating themselves from these external shocks.
And building a global brand, too.
Right. What stood out to me was their integrated global sports community strategy.
Yeah.
They're really leveraging global athletes, people like Gabby Thomas, Jafine Perini, and they just added NFL Pro Bowler Derrick Henry and ultra runner Rob Krar.
Okay, big names.
Yeah, and this isn't just about slapping a logo on someone. It seems to boost brand recognition, sure, but also consumer trust. It helps them connect emotionally with different user groups. And they're backing this up with targeted, multi-layered marketing campaigns, YouTube, TikTok, Instagram, the works. Seems to be successfully elevating ZEP Health's global brand perception.
And we saw proof of that, right, with Amazon Prime Day.
Exactly. Perfect example. Amazfit ranked as the second most improved wearable brand year over year in the USA during Prime Day. And get this, Prime Day sales surged by roughly 60% in EMEA.
60%. Wow.
Yeah, that shows real traction in key markets, especially you'd assume with those new products hitting the shelves.
It really does. It's a clear signal their strategy is clicking with consumers globally.
Yeah.
Okay, so building on that strong performance, that strategic execution, the forward-looking guidance they gave was, well, exceptionally bullish, wouldn't you say?
Very much so.
For Q3 2025, ZEP Health is guiding for revenue in an impressive range, $72 million to $76 million. Let that sink in for a second. That represents an astounding 70% to 79% year-over-year growth.
Yeah, that's aggressive growth.
Right. And management also reiterated they expect sequential gross margin expansion,
Yeah.
another key indicator of that improving product mix and operational efficiency paying off. I mean, this guidance, it clearly underscores the company's significant confidence in their transformation, the momentum they've built. Feels like they really believe this is just the start of something bigger.
And if we connect this to the broader market context, the immediate reaction to the call was, well, overwhelmingly positive. The share price shot up intraday, hit a new 52-week high. Turnover was more than double its 20-day average. A lot of activity.
On options.
Yeah, the options market was buzzing too. Lots of concentrated activity around the August 15th, 2025, $17.50 puts and calls. Implied volatility was super high, over 145%.
Meaning traders expect big swings?
Exactly. Big price swing soon. And look, this is a stock that's already seen massive returns, dramatically outperformed the broader market, the SPY, fueled by these recent launches, Balance 2, Helio Strap, and maybe that strategic inventory build to hedge against tariffs. Now, stepping back to the wearables market itself, Apple still dominates, over 35% unit share, but Xiaomi and Zepp, they are definitely gaining ground, especially in that competitive sub-$300 segment.
Right.
Macro trends look okay-ish. Consumer electronics demand seems to be recovering a bit post-Olympics, which helps. But the potential for a new U.S.-China tariff round late 2025, that's still looming. It's a watch point, even with ZEP's sourcing strategy giving them a buffer. Management's tone on the call, very bullish. And you see retail trader chatter picking up, talk of a new bull cycle. Though, technical analysts are flagging some caution signs, RSI above 60, bearish MACD divergence.
Which basically suggests it might be a bit overbought, potentially due for a pullback.
Could be, yeah. Technical indicators suggesting maybe the rapid rise needs a breather. And interestingly, there's still a lack of formal sell-side analyst coverage, which might suggest institutional response has been a bit muted. Maybe the price action has gotten ahead of the fundamentals, driven partly by speculative interests.
So it really feels like after 8 straight quarters of contraction, this Q2 report marks a pivotal inflection point for them, doesn't it?
It absolutely does. I mean, revenue lipping 46%, powered by refreshed mid-range stuff and that successful debut of the Balance 2 Helio Strap combo aimed at endurance athletes. The strategic shift towards, let's call it premium adjacent price points, that's clear. Plus, deeper channel penetration. We saw that in the US and EMEA with that huge 60% Prime Day sales surge. They're cutting costs where they can while leaning heavily into AI with Zepp OS 5.0, trying to differentiate on things like recovery analytics, specific training modes, and, their execution credibility seems to have improved. Stabilized gross margins, strong cash position funding that inventory build, it looks much healthier. However, that very aggressive Q3 guidance projecting up to 79% revenue growth, that definitely requires flawless supply chain execution and continued strong sales velocity. No room for error there.
So looking ahead, what are the key near-term catalysts investors or anyone interested should really be watching for?
Okay, key things to watch. The global rollout of Balance 2, that's happening in September. Any news on regulatory clearance for their Zepp Clarity hearing health device? That's a different area for them. Obviously, holiday season sell-through metrics will be crucial later in the year. And any updates on Xiaomi's strategic stake, if they dilute further. The longer-term story here, the narrative they're pushing, is compelling, shifting from just a commoditized tracker vendor to an integrated digital health platform.
That's the big ambition.
Right. If ZP can really leverage its growing athlete ambassador program, those AI features, and sustain margins in the mid-30s and scale towards, say, $300 million in annual sales, then this could genuinely shift from just a turnaround or survival story to a real secular growth story over the next few years. So specifically, watch for any guidance revisions around early October, November's Singles' Day sales figures out of Asia, and of course, any new tariff headlines.
Okay, fascinating analysis. Now, for the part where we play around with some ideas based on all this, just a very quick, very important reminder. Everything we're about to discuss is purely illustrative. It is absolutely not financial advice.
Not financial advice.
Definitely not. Please do your own research. Talk to professionals. Understand the risks before making any investment decisions.
Absolutely. So with that huge disclaimer, if I were hypothetically pitching to an investment committee, considering the upside potential management's talking about, return to growth, the digital health platform shift, maybe hitting $300 annual sales eventually, and factoring in that super high implied volatility in the options market we mentioned. Well, one highly speculative bullish idea could be to consider a long-dated out-of-the-money call option, something like maybe the January 2026 $30 strike call.
Okay, January 2026 $30 strike. That's definitely out there.
Exactly. The rationale is to leverage a few things. Management's belief the company's undervalued, the proven success of Balance 2 and Helio Strap already, that clear shift to a premium mix, and of course that incredibly strong Q3 guidance. The outrageous part is obviously the aggressive strike price. And the fact that it assumes continued almost parabolic growth, it relies on that revaluation story playing out and them flawlessly executing towards that $300 million sales target.
When the plausible part.
The plausible part hinges entirely on Zepp Health actually doing it. Flawlessly executing the shift to an integrated digital health platform, keeping the momentum going through the holidays, successfully launching new products like that hinted at Q3 flagship device. It's definitely a high-risk, high-reward kind of play, essentially betting big on their ambitious narrative becoming reality.
Very interesting hypothetical pitch there. So, okay, let's recap our deep dive into Zepp Health's Q2 2025 earnings. We've seen a company that's, well, not just returned to year-over-year revenue growth driven by some exciting new premium products, but also seems to be diligently managing costs and really strategically positioning itself for future expansion.
This isn't just about selling more watches or trackers anymore. It feels like a clear pivot towards becoming this integrated digital health platform. They're pushing into sales channels deeper and really leveraging AI to try and stand out in a super competitive market. Now remember, everything we've discussed today, all these insights, they're just for informational purposes, designed to help you stay well informed. And as we wrap up, here's maybe a final thought for you to chew on. Given Zepp Health's a really ambitious narrative shift, moving from mainly a hardware vendor to this integrated digital health platform, how do you think they navigate a landscape that's just dominated by giants like Apple, Samsung, Google? And what does it really take for a hardware company fundamentally to successfully make that transition into becoming a long-term secular growth story in the digital health space? Something to ponder. Thanks so much for joining us on this deep dive. Keep exploring, keep learning, and stay well informed.